How's it, guys? Welcome to CryptoEMC. With me is my love Lee, or maybe I must use this hand. That's my love Lee, and and you're on CryptoEMC. Over the weekend, we had a stream. We explained to you guys how to best protect yourself when the market does these crazy little things. And we did give you guys a little bit of an intro, but I'll leave that for Lee to just give that intro on what we said could happen afterwards. Currently, there's a lot of speculation and a lot of speech about distribution patterns and a bear market forming, and people tend to take these emotions to the extreme. Everybody loves being greedy, so they're extremely greedy. And everybody hates being scared, so they're extremely scared. So stick with us today. Today we're going to help you navigate the social media news out there. We're going to help you understand what a Wyckoff distribution actually means, and how to apply it to your own portfolio, to your own advantage. So my name is Rudo. I'm known as the chart artist. With me is my buddy, my love, Fibonacci Lee. How are you doing, my friend?
I'm good. Glad to be back. Ready for a new week, new exciting week. And then, yeah, let's get started. I can't wait for this episode because when the first time I know you, Rudo, you gave me an amazing presentation on Wyckoff strategy. So I'm glad to be here, and I'm glad that you're gonna share this lovely strategy with all of us. So I'm really excited to be here today.
Thanks, buddy. So, guys, sit back. You're in good hands. Please hit those like and subscribe buttons. And I love that quote: Plan B, Plan C, Plan EMC.
No, we're gonna get blocked.
Yeah, I don't want to get blocked. Right. So what I can say, guys, is before we're going to go into some theory, look at it as sensible required theory. You need to know there's the basics of these things in order to be profitable. I think let's touch back on what was said, and not to kind of repeat or lengthen this stream, but to actually just see what played out. So Lee, buddy, what was the main takeaway that we wanted everybody to keep an eye on?
The weekly close yesterday, like I said on Saturday, I was really expecting a weekly close above 48,000, and then Sunday evening we closed $1,000 above 48, which is quite good. So I'm happy with that. It's showing like sign of strength from bulls. But the sad part is there were no lot of fights and not lot of volumes, which is normal. And that should also remind you guys, if you are still doubting that there is no market maker out there, there is. If the market maker is not moving a finger, is not moving the market, you and me, we cannot move the market. And this is what happened during the weekend. There were no movement in the market. So
that's true. That's true, guys. Yeah. Necessary evil.
Okay. So that was the chart, yes. Can you see it now? Because yesterday I was talking like 1 or 2 minutes without showing the chart.
I think everybody can see it. So let's see. Is it popping up? Everybody's seeing the chart. Our Super Mario music there telling us everybody can see the chart. Okay, cool.
Excellent.
Lee. Okay, so please just highlight and maybe put a vertical ray around the 48,000 level, so that and make it a bright color. Make it a bright green or a pink, for that matter, so that everybody that is new can clearly see that significant level. And while he is doing that, guys, remember what we said. When you looked at 45, when you look at where the ray starts to the left-hand side there on the screen, when we were there, everybody loved 48K. When we came back to it, everybody the second time round and tested it, we're looking at that two big inside shaving candles before the big reversal. Maybe, Lee, you can just move your cursor about 7 weak candles to the right. No. Back up to the top. Just leave your zoom as it is. About 1/3 to the left-hand side of your screen. Okay, we're going to be moving and begging him to move his candle. I want you to move your cursor, my friend. Go to the second time, or the first time we tested 48K. Please just do that.
This one here.
No. That's the
This one here.
Yeah, and then go down to where we tested it. Just move to the right slightly. Stop. Go back. I'm giving up. There.
Yeah,
It's not going to happen today, guys. But okay, the fact of the matter is, let me just maybe use my screen. Then we can save you guys some time here. So what I wanted to just show you guys, and I'm going to quickly go to the weekly. Where's my 1 week? Boom. Okay. So looking at the screen, and remember now we've got this horizontal ray sitting here, and we've got the 48K level. That is significant. Now I'm just going to make it a big red line to emphasize it. When we looked at this area, this is where everybody was fine with it. Everybody was okay. It's not going to do anything. And there, everybody lost it. And by the time we got here, everybody was saying the bull market's back on. So the way that they've experienced 48 was different each and every time. So not all 48s are created the same. Okay, so with that being said, now we're back and we looked at the significance of 48. So I'm going to give Lee's screen back. Okay, buddy. So over to you. In your words, why was the close above it significant?
Well, if you can see on the past, not only the 48,000, but I've got some tools here that is giving me some resistance and support. So if you look in the past, you can take any level. As soon as we gain or we climb those levels, we can close this weekly candle above those lines. We always have another attempt to the higher level, and it always happens like this. I mean, you test it. If you can close the weekly level above those support line, then we're gonna go and test the next level. The only time that we're gonna test the lower level is when we close the weekly candle below those lines, so support. So as you can see, we didn't went here. We didn't have enough strength, and we closed the level, the candle below that level, and we come back and we want to test the lower level of support. And unfortunately, it happened here as well. We closed below. We went to test the lower level. Okay, we closed below. We went to test the lower level. Now, what if we fast forward here? That's why I wanted us to close above that to show that we still have the support at 48. And now this week, and like I said, Saturday, that was a good sign. It's a first point for the bulls. But this week candle here, it's gonna be really important for me. Still, if this week, end of this week, if we close below 48, we may wanna go back and test this 41K. Within this week or within this month in December. But if you manage to turn this candle green in that case, then I'm pretty sure that we're gonna hold that level, and maybe the next test for us will be 56. So it's fine if we're gonna go back and week inside this week here, the previous week, to fill this imbalance or to fill those orders. I checked this week yesterday. There were not a lot of imbalance, but there were not a lot of orders here. So if this week we come back to this level and fill those orders, and then we come back before the end of the week and close this candle green, so that would be a really bullish sign for me, because we're gonna still close above this 48. So that for me is really important. I mean, you can see in the past those weeks, it tends to get filled all the time. The market is never gonna leave a big week like this unfilled. So the market will always want to come back and fill those orders before they're gonna go, before you want to go up again. You can see in the past, every time we have a sell-off, a big week, then those orders, these weeks here, usually get filled all the time. Okay, so I'm expecting this happen again, like this as well. Coming back to fill those orders within 1 or 2 weeks, test maybe this 41K or even sweep the lows, and then we can move maybe in a week or two. We can go above that and test the 56, and then carry on with the bullish run.
Great. Right, guys. So we recapped this. So for those that we had a little bit of technicalities or technical issues with Lee's screen, I mean, I think that's now clearly set out, and everybody should be able to understand that. So I want to see in the chat, guys, everybody that now understands what is the significance of the 48K, just write 48K in the chat and send it through so that we can move on. While you guys do that, let's talk Wyckoff. And I'm going to remove your screen here. Lee, my love, I'm going to have to get myself a shirt like that. Okay, so when we talk Wyckoff, there's normally a sense that everybody uses Wyckoff in the instance that it's going to move in a specific direction. So they're using Wyckoff and they're setting themselves up for immediate failure. Why? Because they might get it right the first time round. And the way they do it is they go and look at these patterns, and you can go and Google them. This is the instance where free information can sometimes bite you. We showed you how good free information with a divergence can really help you, but free information can literally bite you if things like this goes wrong. Okay, guys, so good free information would be the Bitcoin divergence image. Remember that, please. Okay, so what are we going to do is when we look at these patterns,
it's only half of the information. You need to understand those divergence in order to become powerful. If you don't understand, you cannot understand the divergence, but just look at the pictures.
We've shown you. We've please go and have a look at those videos. We've shown you how to apply divergence correctly. And we're going to consistently be applying more divergences as we go around. So that's the same thing for when Lee looks at a specific Elliott count. Lee, you've got that chart. Just quickly show it as a refresher. Your 6 different Elliott counts. While Lee does that, guys, remember we've got our daily early supporter role that comes through, where we guys are going to be choosing somebody out of the stream, and we're going to be giving him a slot in our daily supporter. Initially, when we launched, we opened it up to everybody that should choose to sign up, and now those roles are full. So we're just going to add in every day. We're going to add one lucky guy into the daily supporter role. And Lee, we've got a webinar today with him. Am I correct?
Do we? I think you said we're gonna do a weekly one. It was not the intention at the beginning, but yeah, if you want, yeah, if you guys want, let us know when we're ready. We can do that today.
Weekly or monthly? What do you think, Lee?
It's all about the community. So if they feel the need for us to do a weekly, then we can do a weekly.
Okay, so let's see, weekly, monthly. Let us know in the chat. I think we'll leave it up to you guys to decide. I mean, in the end of the day, we're doing it for you. Right. Okay, cool. Let's get back to Lee's counts. Remember, guys, back to the point now. Elliott wave, you can see there's different counts. Think of them as poker hands on the table. 2 pair, 3 of a kind, royal flush, all those different stuff. Each one of them has got their probabilities in relation to the hand that's been dealt onto the table. And it's your decision to decide, and it's your choice actually to decide whether you're going to be playing that hand or whether you're going to be folding. We had a trade. We gave you guys a trade setup a while back. We wanted to buy at 54 because we said 52 is too obvious. People are going to miss that one. It went into that range. It went to about 53-ish there around, and it went up. And we told you guys, fold your hand in the sense that my stop is going to be set at break even. No higher high meant that I don't see momentum. I don't see what I needed to see in the market. There's the one. There's the no higher high. We had no higher high, and that bothers me. But now what we've done is we've now had a complete wash of liquidations in the market. Now, what does this necessarily next step need to be? And this is where Wyckoff really kicks in. Now, when we talk Wyckoff, I explained to Lee in the beginning, we actually did it wrong. Lee, me and you, I can remember when we did Wyckoff. You'll give me a 15-minute chart and you say, distribution? No, with a little question mark and a WhatsApp. And then I'll get another Wyckoff pattern drawn out a few minutes later on a 15-minute.
I didn't even follow a Wyckoff pattern on 1 minute.
Yes.
You showed me Wyckoff pattern on 1 minute. Basically, I think Wyckoff and Elliott wave, they are, it's just, they are both very good strategy, technical analysis tools. It's just Wyckoff is the denomination or the name that you're giving a certain stage of that. We just used other, other words for it. As you can see here, I've got like maybe 5 or 6 different scenarios, and for Wyckoff, it's exactly the same. Rudo cannot say now it's going to play out as a distribution or as accumulation. He can just anticipate. So please, Rudo, show me.
Okay, cool. So I'm going to go to the recently Googled images. Now let's click on one, and we can look at any one of these. And normally what happens is the market does this. It prints these beautiful lines, and you think like, hell, I've got this. This is my shortcut. But Wyckoff is very hard. So I don't want to start entering into a Wyckoff lesson, a hardcore lesson, because the stream isn't long enough for it. But I want to teach you what not to do, because that is capable, and that's something that you can do. So first mistake everybody does is they want to know whether it's a distribution or an accumulation. Because if it's an accumulation, and we can wait for this image to just clear up a little bit. Oh, no, I clicked on a Facebook image, so it's not going to do that. There's an accumulation. So if it's an accumulation, people say it's going to go up. So they're setting themselves up for failure because they are taking a trade on the notion that they have a guaranteed trophy card in their back pocket, that's going to allow them to win this hand regardless. So they'll double down on their trades. And that's normally when people get really punished very hard. And then the same then obviously for the distribution pattern. So what I do is when I look at my Wyckoff, I don't want to know whether it's a distribution or whether it's accumulation. Let that happen as the print plays out. In a similar way that Lee lays out his versions of the wave counts, but he lets that play out to decide which one is going to be the one that's more probable. Now, the second thing I want to take you guys through when we now look at this. Now, you've got the information around this. Wyckoff works on a couple of principles, and these are test events. Now, there's 4 major ones that you have to keep in mind when we look at Wyckoff. The first one would be, your preliminary, where you start losing momentum. Then you can move up to your preliminary. Your preliminary stop. Yes. Okay. It's if you look at this, let's zoom out and let me just show you guys. Look at all this momentum. We had all this going. Then it had a little bit of a retrace, and then boom, and then from that point we weren't really moving. Okay, so that is your preliminary. So it's telling you that, hey, momentum is getting lost here, because if we were gonna go on, we say this a lot. If a trade is supposed to work, it's gonna work. It's not gonna hover there for weeks. It's gonna work. It's gonna go up. So the same will be on a larger time frame for an analysis like this on the weekly. If it was gonna work, it's going to work. It's gonna go up. So you can see we didn't daddle around between the ranges that long. We kind of step. Then when we started hovering in this area, that's the sign of weakness. Now, how does this normally work? Is there's many ways that you can measure it. The easiest way is to use the line tool. And what I'll do is I'll say, okay, that right, where was a high, there was a low. There's a new high from there to there. And there's a new high from there to there. Okay, great. So the high between this one and the last one's kind of the same. But look at the retrace. I'm taking on the retrace. And there's many other ways how you can measure this as well. I'm looking to the retrace. The retrace is getting more severe. There we retraced about 50%. Here we retraced only 38%. So when we start losing this momentum, the retraces are getting bigger. And then guess what? The next high was even shallower than the first high. So here we had a high, and let me just change the color on that one to make it here we had a high that was that height. And the next time, once we created the low, we didn't even make a high that much bigger. And then guess what? We hovered around that level, and we fell down. And that's the second sign that, hey, we're losing momentum. And it brings us to that thing that the most important rule that you have to do, before you even look at all Wyckoff patterns, is that higher highs and higher lows is key. And this is what the 4 events basically show us. So the first one tells you you're losing momentum. The second one gives you the top. The third one is the reaction. And then the fourth one is the secondary test. And that kind of cements in that we're in a Wyckoff accumulation or distribution. Now, I don't go and
in your Wyckoff, that's why you are sitting on your hands like all the time. Because those four events, do you trade it?
You can't really trade it. When you see the preliminary play out, and that could have also been a preliminary. What you want to see is once it starts bouncing, you want to see it leave that range. But this time it didn't leave the range. So how many weeks did we have? 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks to get out of the 57. 9 times in those 9 weeks it was at that specific price point. So that's all the time you would need. Wyckoff is a very slow tool. Wyckoff is brilliant for the investor, not there for the day trader and the scalp trader. Wyckoff is there for the investor. And remember, we said it in the beginning, both myself and Lee, we've got completely different strategies. Lee is the man in the mix. He's the hustler. He would be the guy. If we were in the casino, everybody would be standing around his table because he's the one with the crazy bets. I'll be the boring guy in the corner, walking away with close to the same amount of money, but without all the attention. And that's just my strategy. Distribution and Wyckoff just fits me, just the way I am. Not everybody's born inherently cool like my love here. So
remember, you need to find the strategy, the risk management, the setups that suit your personality.
That's it. Yeah. And that can only happen through time, guys. If you try and force it, you're just going to burn your fingers. And ultimately, remember, you need to love what you're doing. It needs to be fun and needs to make you happy. You need to enjoy it. If you don't enjoy it, what's the point? Okay.
You need to find a partner who's got another strategy and you can trade together. This is what we do, basically. Yeah.
I looked at this guy and said, hey, I think he knows his stuff with Elliott. Let's see. I've got that strategy now in my back pocket. Lee, when can I buy? Right? Make use of community, guys. That's why the Discord is there. Please go to the Discord. The links are there. Let's bring up the links again. The links are there, and it's on our Twitter and on all our Twitter feeds. It's pinned to our channels. You can't miss it. Please don't get into a scam account. Go to our Twitter. Go to our and look at this video and all the other ones on this channel. The descriptions, the links are there. Get to the right one and go create your community. I promise you, that's what makes it powerful. Okay, Lee. So now we've talked a lot, but I haven't really shown anybody anything about the distribution yet. So let's quickly touch on that. So now when we have this 4 events playing out, they are easy actually to get. These 4 events
Wait. Did you just say distribution? You can't say distribution right now.
Can't say distribution. Thanks. He checked me there. When you have the 4 events, that's when you need to start thinking about whether it's going to be distribution, accumulation. And that's where Wyckoff actually gives you 7 tests that you need to do. Now, that's, like I said, Wyckoff is like eating in your medicine. It's a horrible thing to do. So we can't do this. And I don't want to bore you guys with these tests. But the key is there is a little bit of a nice shortcut that Wyckoff taught me. And this is the beauty of it. Not all lateral patterns are distribution and accumulation patterns. So we tend to want to apply it to everything. Sometimes the market is just holding. So the reality is, if you look at this range over here, people would have looked at that as a distribution and so forth, which it isn't. It was just a lateral pattern. We were losing momentum. Yes, you can go onto smaller time frames, and let's go into a daily and move that into a line. And this is where the Wyckoff analysis really tricks people. And we look at this, and I move just to a line tool, and then I bring on the distribution image. And I'm going to download this image for you guys. Just save the image. Okay, and then I'm going to go back. I've got it there, and I'm going to just bring it here, and I'm going to bring it to the half of my screen. I'm going to do this, and I'm going to flip to this range over here. If I do this, and we start looking at this, now I start drawing out these lines. I mean, I've got them all set out there. So there's the preliminary, and then we start moving out these things, and there's the last point of supply. And This is how Wyckoff tricks everybody, thinking that, yes, we've made it now. And when you start looking at all these similarities, then it starts giving you, especially somebody that's new to trading, a hope, because the belief still sits there that we will be able to plan and execute trades with 100% accuracy. That's normally how it works. That's how people mess up their Wyckoff. So if you do that, guys, you're going to mess it up. So please don't do that. Okay. So that being said, I've shown you guys how easy it is to get tricked into Wyckoff. Looking at next to me, looking at A versus B. Now let's open up the big picture of what it is that I want to show you guys now. Now, the way that I was looking at Wyckoff, and when I was on Banter, I basically threw clues on that out as well. And the idea is that for me, due to the scale of this big move, this is only one impulse. So it is fair to assume that this is, in its entirety, the event that creates the ignition or the start of a lateral pattern, which is what we're experiencing just yet. And at that stage, I said to you guys, so with the way that I've been looking at Wyckoff, this looks to me like a reaccumulation. Because why? Remember, I said we can't label this, but why? Reaccumulation just means that the trend has not been broken. It's merely changed its character. And the larger time frame trends, when we go to weekly and monthly, we've shown and proven to you guys that it's still going to move on, and it's still going to, there's no signal that it's going to reverse just yet. So with that being said, Wyckoff is a powerful tool, because now if I'm saying to myself it's a reaccumulation pattern and we bring back that image, don't you think then, if we look at this image and we look at the scenario of all these accumulation images, would you now be comfortable buying these lows, these sweeps of these lows? And that's where we talk about buying the fear. Because if we don't want to label a distribution versus an accumulation, and we move back to our chart, what do we have? Both Lee and myself gave you guys this buy over here on Twitter. I wanted to buy there, and that's still a valid level. I had that level marked out, but I didn't physically say I'm buying there, so I can't claim it on Twitter. And now, what have we done? The lower level now has been hit at this stage. But this time I thought I'll be more conservative and take the 54. But it's, in the end of the day, it's the same way that I've looked at this accumulation, and I said to myself, this is purely a setup. It's a correction wave to initiate what needs to happen. Either large institutions are going to buy this up when nobody wants it, or if there's low volume around this level, they're going to push the price up again and use that momentum to get the hell out. So we've got a choice to make when we look at this. So that being said, looking at this and looking at the way that accumulation and distribution can play out, what do I want to see and how do I want to go about this?
So what is the next event?
So the next event will be a secondary test. So what we now have is we've got our first test completed now, which is this one over here. So it's a sign of strength, because what we've done is we've gotten above this level, this key pivotal 48K. We've made that high there. So that's a sign of strength for me, according to Wyckoff. Now what I want to see is I want to see a sign of strength over here. And how would a sign of strength be? Maybe we stay here. Maybe we go down there. But what I don't want to do is I don't want to be leaving and losing this level over here. So now, investment portfolio wise, if we cross 34K and we start falling in this range over here, I'm going to start making some hard, serious decisions getting out of my long-term holdings. Not at that point though, probably when we're here, but that's a sign of weakness. That is the sign that at that stage, we would most probably come back up and create what most people would now start saying, big head and shoulders pattern. And that's normally how these patterns play out. That's how people trip over them.
Can we go a little bit lower here not going to the sign of weakness below this, what you have 30, just a little bit below like this. And then that is a sign of strength, right?
That's still a sign of strength.
If we're going up from here, not making a lower low, now I think what the market's gonna go, if you run that line a little bit lower to 48 or even 50, 52, people are gonna see this big head and shoulders. Exactly. Now people are gonna start shorting, even we have a higher low, and when the whole market is gonna get scared at that time and get short, they're gonna put promises to buy at higher level, and this is when the market can turn around, because it's so obvious now that you have a head and shoulders. And I just saw in a comment as well, I saw people telling us, can this be a head and shoulders in the future? Yes, it can be. And this is so easy and so obvious for the whole market to see that people will get scared. They're gonna all get out of this bus and even start shorting the market on leverage. And that will be the correct time for the market maker to just push the price higher, taking those stop limits on the shorts, which is the promises to buy. And this is like the biggest short squeeze that we're gonna have, adding oil on the fire, and that will push the price and leave the range from 69 to, yes. And then we're gonna go to the next range.
That's when we leave. Now we need those promises, because the market.
So now you have A, B, C, 1, 2, 3, 4, 5. Elliott.
Is Elliott. So, and normally this is how we go about it. So we lay these scenarios out, and then Lee goes and he shows me an Elliott count, and I say, Lee, I want that count to play out, because within the biggest scheme of this, that might be the probable one. But Lee can also show me a count that will most probably say that we do that, and that would be the end of it. So there's always risk. There's no guarantee.
If you do that, then you have to just basically move your center of strength and those SOS, OST and everything back to a little bit forward to the right side.
That's it. But now this is the simple way of doing it. The other way to do the Wyckoff supposed way that you should be doing is, now you need to analyze each one of those candles. You need to analyze these candles. There's 7 tests that you need to do on all of them. And then once those 7 tests are all positive, so we might do this one and 4 out of 7 is positive. We might do that one and 7 out of 7 is positive. Then you can start creating a bias and saying, okay, right, when we get to the low, you buy in any case. But when you get to the top, you short as well. And that's the beauty about Wyckoff. When you apply it, you can play both sides. And who of you guys haven't thought, maybe give me 999 in the chat, haven't thought of playing both sides? Sounds like an amazing thing, because then the market can decide what it wants to do, and you're going to be in the pound seat. And that's where the lateral patterns come in, because then if you look at this, Lee, if you were to want to short this, where would you want to short it?
Well, exactly at the 618 retrace, or I'll try to short the next bearish divergence.
Yes. And if you wanted to long this, where would be a beautiful long?
Yeah.
Maybe there, maybe. Which means stop can be hidden over there, and with a short stop can be hidden over there. Yes,
that's why the market can, and that even right now we cannot decide, because at that time the market will decide where is the money. Is it on a short or is it on a long? They can turn around very fast. Is there more money to be made when to get those promises to sell, then the market will go south. So it's really too early to call a pattern. And tell me about the volume.
So
because I remember at the beginning you always look at the volume and you say, and that is something that already intrigues me as well. I mean, the difference between high volume and low volumes.
I'm gonna just take the screen away. I want you guys to listen to this little bit of wisdom. When we look at placing a trade, there's basically 4 types of trades you could take. If you wanted to go long, there's a market executed or limit executed way to enter the market. What do I mean by that? Market execute, you tell the exchange, I'll buy at any price that's currently labeled until all the money that I'm willing to buy is used up. And a limit executed order is, I will buy with all this amount of money I've allocated, but only at that price. And then the same as if you were to short. If I were to short with a limit order, I'm going to only short sell at a specific price. Short's another way to, if you're spot trading, just to take profit. I'm going to take profit as a limit order. Every time price wicks into that price bracket, the exchange will sell only at that price. But if I sell as a market executed order, as soon as it hits the price, I'm going to keep on selling at whichever price is tendered until all my money is used. Now that then creates different types of candle wicks. Let's look at them. I'm going to bring up my screen. Now when you look at this chart over here, do you think that if we look at this, and let's just move this away, this candle was created by limit orders? Who of you guys, let's quickly see in the comments, think that this candle was created by limit orders? Send me your limit names. Just write limit and send it to me. Let's see who. And then I want the ones that think that this was created by market executed orders. Send in market, and let's quickly have a look at a couple of names and see who's on what side. And then while that is happening, while you guys are sending that in, so there's a lot of market limit. So at the moment, limit is, it's kind of 50-50. So, sure. Okay, so Lee, we've got a divided audience here today on limits and markets. The reality is that's market executed orders. Why? Because price didn't hover and close there. Limit orders slows down the market, and limit orders necessarily does not come with a big volume bar behind it. Limit orders is a way that you can slow down and hold price. If I'm a big whale and price moves into my price point, my take profit zone, say that's my TP zone, and price goes there, and I've got a 10,000 Bitcoin, what it's going to do is every time price goes, it's just going to sell until there's nobody willing to buy anymore. And then price might find more liquidity, and it's going to move back in there, and it's going to move back in there. And what that means is it will buy and absorb demand. So normally the way that the volume candles will print would be kind of flat, because demand is consistent now because you're trending, and they're going to be roughly the same height. But when we look at the other end, the lower end of the scale, and we want to look at the volume there, what we would want to see is a volume that's tapering down. When volume starts tapering down, it means that all this back and forth has really exhausted everybody. Everybody participating in the market is getting to a point where they're giving up. That's it. I had enough. Which means if we want to initiate another move to the upside, there's going to be very little people that took position there. If the bus is full, doesn't move. And what will happen then is volume would then afterwards start forming in, because these guys, everybody that starts giving up, because we've got relatively low volume here, they're going to start wanting to get in on the party. Then with the short promises and everything behind it, that just drives price out. So that's the way. So when we look at these patterns, we want to be looking at the volume, because the volume gives us an indication.
So the problem with the previous move from that previous, the 48 until 69, the problem here is we didn't have a lot of volume. So that's why that was the early sign that this move won't last.
That's it. So you can have your distribution drawn out or your accumulation, whatever you want to call it, drawn out. But the reality is, if price goes up, volume needs to support it. If volume's not supporting it, what does it mean? It means that it's going to come back down to where volume was. Where was volume? There, to find support for continuation. And you can best see it when you look at, and this is now a futures contract, you can best see it on any bull run out there. And let me just make this a little bit bigger. When you look at any bull run, there we go. Look at that volume. as price is going up, volume is going up, volume is going up, volume is going up. Then you end up with a scenario where what? You're getting the last few days where volume just goes and goes and goes, but price just goes and goes and goes. But what does volume do? Doesn't really support it. And that's normally when we print a divergence.
A divergence in the volume, yeah. That was about to say.
Yes. And so looking at where we are and looking at where I'm always saying that we're currently doing this. We're currently fighting with the market. If you can look at this, you can see what needs to happen. You have got high volumes at the top end, and then you've got buys happening on the market executed areas. So there's big wicks. People are filling bags. People are filling bags. And in order for us to know that we're going to go, you need volume to kick back in. Volume kicks in, volume kicks in. Every time we go up, volume kicks in until it does the opposite again. You lose momentum, you have to come back down and test. And that's how the market steps. And that indicator that Lee uses basically uses these levels. And price will always step between these levels. And remember, the market never repeats itself, but it always rhymes. And that's how you can, with high probability, grab these entries and get these buys in a scenario where price goes. And this is where it starts getting really crazy. But I mean, that was the lateral pattern. Came back in that range, punished a lot of people, and then went out again. So, okay. So, guys, I know that this was a hard one. The thing about distribution is it's not an easy thing to digest. But the reality is of what we're doing now is we're setting ourselves up with a low volume in relation to what's happening. If we can come back down with very low volume, means there's very little selling interest. Means price is going to want to do what? It's going to want to go back up. So let's see. Let's see what it does. Lee?
Wow. Thank you.
What have I missed?
A lot of things, but this is what the best we can do within 40 minutes. Wyckoff study. I mean, I have studied Wyckoff with Rudo for 2-3 months, every single night, 1 hour. And that was only 1/3 of, Wyckoff. So Wyckoff is really something really long to learn, but really, really, really powerful. And I'm still learning with Rudo every single day. I'm so privileged to have you as my trade partners, so I don't have to learn that Wyckoff so hard. Yeah, but thank you for sharing your knowledge with us today. Within these 40 minutes was amazing. Thank you.
But the nice thing about it is we ain't going anywhere. So if you guys click the like and subscribe button and share and hit that bell icon, through time, there's going to be more sessions. There's going to be more info. And we will be able to guide you and get you in and out on certain scenarios. Because I don't need to be an Elliott master. I've got Lee. And Lee doesn't need to be a distributor, Wyckoff. I don't say I'm a master. It's a Wyckoff is strict.
You can say you can say master. There's no one. There's no one on YouTube. I searched. There's no one on YouTube teaching Wyckoff for some reason. So thank you, Rudo.
It does not make for good video streaming content.
Yeah, it's boring.
It's really boring. Okay, Lee. Let's quickly see. There's 44 minutes. Let's quickly touch on. You've got coins prepared. And while you do that, let's quickly go through. We want to choose another guy while you get your chart ready for the Discord early supporter to join in. So I'm going to quickly go through the comments and let's see who should we choose. Lee, give me a letter. Okay. Give me a random letter, and then the first name that starts with that letter I'll choose.
F for Fibonacci.
F for Fibonacci, Lee. Let's quickly see. The first F, I'm scrolling through this. The first F will be chosen. Now, this is going to be a problem if we don't have any Fs. Subscribe to this channel, Lee.
Or C for chart artist.
No. You can't change it now. I have to go. I have to find you.
I see flashback. There's flashback. I see flashback. So.
Let's see. Where is it? Is it where's flashback? I'm missing it. Flashback. Well, flashback, please make contact with us. I don't seem to find the name. This is a disaster. Please make contact with us. Follow. There's Flashback. Flashback. You're welcome, buddy. You're in the early Discord and the early supporter role as well. There's a webinar today where we're going to be talking person to person, straight, no BS, and just talk trade. That's it. Trade and investment and have some fun. Lee, your chart. Let's quickly get to you. So please send us a DM on the CryptoEMC Twitter page. Flashback. Thanks, buddy. Lee, I'm adding your chart.
Okay, no, I just wanted to look at Cardano today. Cardano, you took a huge hit. A few weeks ago, we were talking about this level. Yeah, you lost a point, I know. You lost a lot of points on that song. On those one. Even me, it was not a pixel perfect entry. So 133, we are a little bit below. But guess what? No matter which coin, if you have a huge sell-off like this, this is the DCA range from the bottom here to the top, and that is the 618-786 zone. So even here, this 133 level, it's not like this perfect entry for me. If you have to go back and if you lose that support, same for BTC. I mean, if we close this weekly candle below this 133, we're probably gonna go and maybe test again this $1 Cardano. Okay, even so now this is really the time to accumulate. But the look at the market, I don't think we're gonna have a huge run in December, and all those alts is gonna come back to the range. It's gonna get quite boring maybe in December, January, and we're gonna set us. So we will have a lot of time to accumulate everything that you want, but be careful on which one to choose. For example, here Cardano, I'm happy to accumulate within this zone now. Okay, so but for example, Luna was, for example, yesterday a perfect take profit place at 68. I mean, it still is 68. We went even one level above that 76. Will I buy Luna now? I don't think so. I'm not gonna buy Luna. You can go higher. It's fine if you have Luna. You can go higher. You just take profits. But I will take much more patience on that one, and see if Luna can retrace. One of the day, if you really like Luna, be patient. One of the day, this is gonna come back to the DCA range. From the bottom to the top, it always come back to the 618, and that is the time that you're gonna start accumulating your Luna, especially for investment. I'm talking investment trade now. I'm not talking like your daily intraday trade. Short term, you can trade any assets because you want to get in, you want to get out, and you want to make US dollars to buy more when the market crash, when the market dump into this DCA range. This is when you use your US dollars. And
so remember, I just want to add this, Lee, for Luna at 68. Oh, I don't have the Luna market cap now, but that market cap needs to double for 68 to go to 120 for you to do a 2x. But if you think about Cardano as an investment now versus Luna as a trade, Luna's only a trade because it can double, but it can maybe not double again because it's been doubling how many times. But if you think about Cardano, I'm not too hell-bent on the price of Luna. I'll be comfortable if Luna comes back to only 40 after it's done its high. But from that point, I'll know I'll get my multipliers. If we look at Cardano at this stage, Cardano has the possibility just to fill the imbalance to do a 2x, guaranteed almost, from where it's at. So for me, my money, I'll be more comfortable putting a little bit there because I know that I'll probably get more multipliers. And there's some really good news on Cardano, some really bullish news we want to share with you guys tomorrow. So please tune in tomorrow. If you have Cardano, I've got something for you guys to do with your Cardano in the meantime. So Lee, back to you, buddy.
Well, I have nothing more to share. Maybe you want to know about Celsius. Is there any bad news? They got hacked. Well, that's why my market is getting scared. The only problem that I have with Celsius, although you want to buy some Celsius, is we don't have a lower low. I mean, we don't have a structure.
Can't buy it now.
You can't buy. I mean, the whole momentum is bearish. You don't know how low this thing's gonna melt. It's gonna drop. I will also wait a little bit. If you are confident about the project, I mean, buying at $3, you can still let it in. But what if it goes to zero? So if you want to buy something like this in a safe buy, basically, I will wait at least for a strong bullish divergence. So
can we have a look at the
RSI,
OBV on this one?
Yeah, sure, we can. But even before the OBV, there's no divergence right now forming on Luna on a weekly. I don't know if there's any divergence forming on a daily.
Yes, it's going up while prices
It's going
down.
up. Yeah.
So it might be that range will be as bad as it gets, but we
So
still need to go.
you want to see a higher high and then come back, test with a higher low. And like I said, I mean, I am not in a hurry to take any decision on the market right now. I know that during the whole month of December, I've got still time, even beginning Jan, still a lot of time to take my position on the market for the next run as investment. OBV on that one.
Let's so on balance volume tells you it's a nifty little trick that you guys can go in TradingView, and what it's going to do is it just tells you whether there's smart money entering. So at the moment, smart money is not entering this thing.
No, I can see the curve is like just going down. So very really low interest. Yeah. Okay, that's it for me. 52 minutes. It was pretty long.
I apologize for that.
And pretty short for Wyckoff. So thank you for your patience. I hope you like this episode. And
please send us some comments on that in the episode as well. Look, we won't be able to touch on everybody's flavor. That's the reality of this. But your comments will be appreciated nevertheless. Constructive, obviously, would be way better than just negative comments. But send them any case. We'll read them, have a look at them, and see how we can better prepare this content going forward for you guys. You are, in the end of the day, why we are here. We want to help you guys, and we want to do it in the best probable possible way. And for those diehard supporters that's here in the live stream every day, guys, I really want to salute you and say thank you. You make it worth our while, to be honest. I really enjoy it, and please go over to the Discord.
And if you want to get notified, when we go live, the bell icon. We're not trying to push so much on the bell on the like icon, but it's a kind of feedback to us. If you have to carry on with this same content, if you guys like it, please hit the like button.
And should we go on holiday?
Yeah, if you don't like it, then just don't do it. But it's also good for us to know if we are doing the right thing right here, right now with you.
Okay, cool. Lee, let's bounce.
Where is your bouncing ball?
It blew up.
I was thinking, why are you not bouncing today?
No bouncing ball today, guys. It blew up, but we will have one tomorrow. Mañana we'll have one. Cheers, guys.
Bye.